ఎప్పుడు స్టార్ట్ చేస్తావు మీటింగ్?
4:30కి చేద్దాం. ఇంకొక 1 minute ఉంది.
ఓకే,
జస్ట్ లైవ్ లో పెట్టేస్తాను. లైవ్ లో ఆల్రెడీ ఉంది.
ఓకే,
4:30 నువ్వు స్టార్ట్ చేయి, నేను రికార్డింగ్ పెట్టేస్తా, అడ్మిట్ చేస్తా.
ఓకే, ఓకే. Good afternoon, everyone. We will wait for another minute or two to let everyone join the meeting. Hi, Ravi. Meeting is yet to be started. We are waiting for there are still participants joining. So I'll start the session in another 30 seconds. Good afternoon, everyone. Welcome to Stock Durbar with team MarketSmith India. I think now most of the participants have joined. I think it's better to start the session now. Yes, once again, welcome to Stock Durbar with team MarketSmith India. My name is Rajshekar Kongari, Equity Research Analyst, part of MarketSmith India team. For the benefit of everyone, this Stock Durbar session is about talking about the Indian markets, specifically describing how the Indian market is placed at the current moment, and also will give an O'Neill perspective of how the markets are placed. Then in the second half of the session, we'll take stock specific queries from the participants. We try to answer as many queries as possible. We won't be any selective in taking the questions. We'll be taking random queries because from the past experience, we have seen a huge surge of questions coming up in the chat box. So for the time constraint, we take only a few queries, and with explaining those few queries, we'll try to educate the investors here about how the stocks to be reviewed from the O'Neill's lens, so that you guys can also be equipped with the technology to review stocks and take decisions on your own. Good afternoon, Abhijit and Ajaya, Gansham, everyone. Again, let's look into Nifty's daily chart. And in this session, I am joined by my colleague, Mr. Wakar and Rushit, and as well as our head of research, Mahesh Joshi, can also be present during the session, depending on how his schedule is. For the time being, I'll be taking the first 10 to 15 minutes, and then my colleague will join and take the next session. Let's look into Nifty's daily chart to review how the markets are placed at the current moment, and we'll try to see how the market is placed, and then we'll also give an owner's perspective of how the markets are. Currently, you can see here the Nifty is advancing slowly, and it is trying to reach its all-time high, which is 18,887. There have been few hiccups in between. There have been few sell-offs in between. However, I can see this 21 DMA, which is a green line here, acted as a very good support for the index. This 21 DMA. So going forward, this 21 DMA will going to be a crucial level for the Nifty. If that level is breached, then we might see further selling happening in the markets. But going by the present scenario and the macroeconomic indicators, that is less likely to happen. Most of the indicators are pointing towards the higher side. Nifty is just 1% below its all-time high. So in the next 1 week, we might see Nifty reaching all-time highs. So most of the participants will be very happy because of Nifty making a new all-time high. Most of your positions will also be in profit. Divya will talk about your stock-specific queries in the next 15 minutes. First, I'll try to discuss about the market, and then we'll move on to the stock-specific queries. So, please, everyone here, please post your stock-specific queries only after 4:40 or 4:45, because it disturbs the flow, and most of the participants will also be not able to catch the momentum. As I was saying, in the tomorrow's session or in the next 1 week, we might see Nifty advancing and making a new all-time high, which is going to be very positive for everyone. And most of the market participants will take it as a very positive step. We'll move on to a few sectoral indices such as Nifty Bank, which has highest weightage in the Nifty, and try to look into Nifty, this sectoral index as well. You can see here Nifty Bank has a very high weightage in the Nifty index overall. Stocks such as HDFC, ICICI, and other banks are among the Nifty Bank, and they also have good weightage in the Nifty index as well. So any movement in this sector will definitely impact the Nifty's movement. Recently, it has touched a new all-time high of 44,500 almost, and currently it is moving in a sideways and consolidating. Volumes have completely dried up. You can see here this area, the volumes have completely dried up, and the price action also dried up. It is trading near its 21 DMA. There is no major action happening in the index, but overall, the stock, this index has a very good support at its 21 DMA. Likewise with Nifty index as well. So Nifty Bank is placed in a very good scenario. This is majorly because most of the banks are doing good on credit asset quality, especially you can see starting with PSU banks, their asset quality used to range between 5 to 7% of GNPS, but most of the banks such as SBI, Canara Bank, and other Punjab National Bank, they have reported good improvement in their asset quality, and private banks which have lesser GNPS compared to the PSU banks, they also shown good improvement in the GNPA levels. So overall, in the banking space, there is good happening, and into loans, consumer demand is there for the loans as well. Even though the interest rates are on the higher side, but still there is a good demand for the loans overall, private and public. So that is the reason banks are doing good on both revenue front and also on the profit front. This chart is in MSI, the Nifty sectoral indices take 15 to 20 minutes to update. That might be the reason for the difference in the closing price, Mr. J. Next, moving on to another major sector, that is the FMCG You can see here this index also is trading near its all-time highs. Definitely there is good demand for the consumer demand is there both in the urban areas and as well as rural areas. This demand took a hit during COVID, but we are back to good pre-COVID levels, and the spending levels have also increased among the population. So the overall the spending habits have increased, and that is fueling the growth in the India, majorly FMCG and other sectors as well. Both the Nifty Bank and FMCG are doing good. But if you look at other indices such as Nifty IT, specifically, this is also has a very good weightage in the Nifty. Stocks such as TCS, Infosys, Tech Mahindra come under this index. They have good weightage in Nifty as well. You can see here overall this index has not doing good. You can see there was short selling here, and again short selling here. This is majorly because of March quarter earnings. This gap down is because of that. Infosys has reported not so good results, weaker than estimated results for the March quarter. So overall, Nifty IT as a sector took a hit, and the commentary from the management was also weak. So the future projections or future growth rate projections for the companies such as TCS, Infosys are not doing good, and expectations of meeting those projections are on the downside. So Nifty IT took a sharp hit, and currently you can see here the index is consolidating near its 200 DMA, but overall if you see it is still around 10 to 15% below its all-time highs. Once this Nifty IT also joins the rally, then Nifty index as a whole will do very good wonders. There is still long way for the Nifty IT. You can see it is trading around near 29,000. Its all-time high was around 36,000. So another 7,000 points for the index. So if this index also makes a new all-time high, which will take a major time, because it is still 7,000 points below its all-time highs. But as the market progresses and the Nifty IT progresses higher, and if the June quarter earnings of these companies come out on a positive front, then definitely we might see cap up openings and Nifty IT also joining the rally. I'll take a couple more indices, and then we'll move on to your stock specific values. Nifty Energy I wanted to take, but Nifty Energy is nothing but highest weightage is there for only one stock, that is Reliance. You can see here Reliance has around 17 lakh crores of market cap, followed by ONGC, which is 2 lakh crores of market cap. So overall weightage of Nifty Energy is only towards one stock, that is Reliance. So Reliance movement will manipulate the overall index. Nifty Energy also is not doing good at the current moment. For the short term, it has been in the upward momentum, but if you look at in the longer term perspective from 1 year, it has been in a downtrend, and it is continuously trading below its 200 DMA, which is not a positive sign. So we want these indices as well, Nifty IT, Nifty Energy, and other indices which are trading below the moving averages, or which are trading 10 to 50% below its all-time highs, to also make new highs, so that the overall market will blossom and Nifty continues to edge higher. There is no major support from the Nifty from these IT and energy stocks. If the support comes from these spaces, then definitely Nifty will hit 20,000 and it will rally further higher. Moving on to next index, that is Steam Media. Again, you can see here similar action. This is also not doing good. Around 20% off highs. Index is trading below its 200 DMA. Again, not a positive sign. So these stocks will also, if they support the overall Nifty's rally, definitely Nifty will rejoice and it will do wonders for the Indian market. Currently, these indices are underperforming, and we would like to see good action happening in these indices as well going forward. I think we can move on to stock specific queries now. I think it's time 4:45 almost. Yeah, already we can see a few queries. Is Pharma breaking out? Yeah,
Rajshekar, can we take a Nifty Pharma chart?
yeah,
Yes, I think guys, a lot of pharma stocks are getting in momentum, and it has been in the favor. So, okay, if you look at the Nifty Pharma Index, I think today's candle is not updated over here, but it has, after a very good uptrend in the last month. Okay, so for 4 or 5 sessions, it underwent some correction, right? And looks like it is again trying to move, as Rajshekar is annotating very well that after a good move, there was some small correction, and then again it has started moving. Guys, just focus on the volume when it went down for 3 sessions. It was a very low volume, right? So this is something you need to look for. That it was it was taking a breather. अब इतना दौड़े है ना, if someone has run so fast, you need to take a little breather, right? And so it was the case with the Nifty Pharma. It took a breather, and I think now it is shaping up. There are many stocks that are forming good base. Many stocks are in the right side of the base. Many are breaking out of the base, right? We can take Dr. Reddy maybe or Sun Pharma as some of the leaders.
right. Okay.
You can see over here today it reclaimed its 50 DMA, right? So जो ये बड़ा gap हुआ था, there was a huge gap over here, but now it has, after a long consolidation of almost from 4 or 5 weeks, today you can see it has given a big move of 2.5% and filled almost entire gap. And look at the volume bar that Rajshekar has annotated. A clear reclaim of 50 DMA, right? And on a higher volume, and it is also forming the right side of the base. So yes, it is correct. इसका RS rating poor है. The RS rating is a bit poor. The buyer demand is poor, but it will improve now. If you can see the line, the RS line is already moving higher, right? And I think the ratings might improve. And by the time it breaks out, you might see some more improvement in the rating. So the leaders are, gradually shaping up. I'm not telling they are good to buy at this point of time. You need a good time to break out. The relative strength should increase, buyer demand, the rating should improve, and then and only then, whenever it is in buy zone, it can be considered. But yes, pharma should be in the part of your watch list. We can take a few others also now. Yeah, there is a breakdown. Atul has a comment that there was a gap down, but yes, now it is recovering. So gap down हुआ था, उसके बाद it went through a consolidation, but now it is trying to move higher. And I think what we will look at is the volume.
Which stock should I do?
We can go with KNR Construction.
Okay.
Then Federal Bank after it.
Sure.
It's a good fundamental story. No two ways about that. Their order book is decent. Fundamentals are good. You can see the EPS strength is also strong. Even this highway construction company has a good ROE of 18%, consistent EPS as well as the revenue growth. But yeah, technically it is not trying to move. So price action is not able to see in the stock. It is going through a long consolidation, right? And it is trading below all its key moving averages. So in the past year, if you can get a weekly chart, we had this one on our watch list. I think we might have booked some profit also as well in this one, but I think after forming this double top type of pattern at the top 340 342 times, वहाँ पे almost एक double top type का pattern बनाया था, stage 3 cup with handles को fail किया, and since then it is not able to move higher. But no two ways about the stock, about the growth story as well as the fundamental. It should be kept on radar, but give some time. See, a lot of stocks are moving in the market. They are giving huge return. Solid momentum है market में, broader market में. There are multiple ideas that are breaking out, that are doing really well. So I think the quality stocks that are not doing well now, you should keep on your list. Let it form a base. एक बार ये base बनाता है, breaks out and the ratings improve, such as RS, buyer demand, that is when you should try to go for this stock. Otherwise, fundamentally and growth story wise, this is good. We can take Federal Bank. So banking sector is doing really well. Some of the small banks, NBFCs, you might be seeing they are doing really, really well. But this stock is underperforming. If you can see last 2-3 days action, 4 days action, high volume पे selling हुआ है इस पे, right? It is below all key moving averages. So good stock fundamentally again. It was one of the big winners. So last time एक movement था. Just if you know last 2-3 months if you ignore, then there was a huge run in Federal Bank stock. And it was there was a time for 2-3 months this was the always the point of discussion. Yes, once it crossed that 107.8 level, look at the momentum it had, but I think it has lost the momentum. It is trying to form a base over here. I think there is some tight area formation just at the current level. So let's see if it can get support near 120 around zone and rebound or not. But otherwise, this should be avoided. Again, repeating, there are many ideas that are doing really well. This should be kept in your list, but let it break out, let it gain some momentum, and then only you should go for it.
Thanks, Rishit. I'll take a couple of queries now. There are lots of queries. I'll start with Sunflag. It was added to a model portfolio recently, but due to correction, we had exited this stock. But you can see it found good support from its 100 DMA, which is the pink line here. But following our rules, we had to exit because of 50 DMA breach was there, and we are a rule-based investor, so definitely we will follow the rules. Currently, it is coming back towards its ideal buy range. I can see here in the blue area, which is a very good sign, and the volumes have also increased. Today's action was very strong. Stock closed more than 6% higher, and volume more than 200% than the average volume. So both the price and volume action are very strong today. So if you are looking for ideations, then you can consider this stock. Currently, we have already 12 to 14 stocks in our portfolio. So it will be a little riskier to add stocks here. We are trying to book out a few stocks which are moving sideways and are looking for opportunities where huge momentum can be catched. Okay. Next is fact. We were discussing about this stock yesterday, but on the opening itself, it opened in the higher end of buy range. You can see yesterday it was very strong, 14% of movement, and the volume nearly 10 times the average volume. So very strong action was there in the overall fertilizer space. Especially this stock had very good action, but it was trading in the higher end of buy range. And on the risk reward perspective, it would be a very risky position to add this stock because stock moving 14%, 15% in a single session can also fall 7 to 8% very easily. So looking at those perspective, we stayed on the sidelines, but we were discussing about this today. Also, you can see here it was very good action. Stock closed in the lower half, but during the trading hours, it was trading 5 to 6% higher, but on the closing basis, closed 3% higher. Volume was also higher in the today's session as well. So these kind of stocks will definitely be will be on the radar for a couple of weeks, and then they go out of radar. I can see previously also around April. I can see in the couple of sessions the stock launched nearly 10 to 15%, and then it moved sideways. Previously in the November December area also the stock made a huge advancement, and most of the gains were paid in the next couple of months. So there is no consistent growth happening in the stock. And recent EPS, if you look at recent EPS and sales were on the downside.
Raj Vakaria, can I take some queries now?
Sure.
Raj, can you give me the chart for West Coast paper? Yeah, thank you. I'm not able to see the ratings. Can you just take it a little up? Yeah, thank you. Perfect, Raj. Perfect. So, I mean, post the strong rally in the paper stocks in the 21-22 phase, I mean, as we can see in the last 1 year or so, most paper stocks are consolidating. I mean, West Coast Papers was one of the leading stocks in the paper basket, and post the cup with handle base, it was unable to break out. Now the stock is forming a consolidation base at the moment. And what is not looking good, as you can see, is the RS line. RS rating is very poor at 49 plus. Your RS line is also trending downwards, which is not a good sign. Plus, the stock is trading well below its key moving averages at the moment, the 50, 21 and the 200 DMA. Not much sign of distribution, but no signs of accumulation as well. As you can see. In the last couple of sessions, yes, some distribution was happening, some big red bars are happening, but still, I mean, not a good sign on the chart. The stock is still delivering decent results in the last couple of quarters. You can see ROE on the fundamental front is also very good. But I mean, on we being a Techno-funda people, in terms of we look entry and exits from the chart pattern. So at the moment, the chart pattern is not suggesting any kind of buy entries, and the stock is pretty wide at the moment, and even the pivot is 23%. The stock is trading 23% below the pivot. So I mean, it's a long way to go for probably the stock to break out. So I mean, at this moment, it's pretty much an avoid at this point. The other we can look at it is Moltech packaging. So, I mean, the last quarter result for Moltech packaging was pretty decent, and because of that, the stock came off its lows. I mean, but as you can see, the price strength for the stock is still pretty poor at the moment. The RS line is starting to trend higher with some accumulation coming in the last 3 to 4 sessions, because you can see what Raj is pointing out. But if you talk about today's session, it could have been a good session for the stock, but the stock with above average volume closed near the day's lows. So I mean, this is not a good sign for the stock. So considering today's candle, I mean, it's not good. I mean, even whenever during the base also, if you see whenever the stock tried to move higher, it has closed near the day's lows. So I mean, even the base formation has not been that good for the stock at the moment. So considering other market opportunities available at the moment in the broader universe, again, this stock can be an avoid at the moment. I mean, till the point in time, the price volume action for the stock does not improve. Then we can look at it as GRSC. It's one of the watch list stocks for us as well. I mean, as you can see, all of the ratings for the stock is pretty good in terms of the EPS strength at superb at 88, price strength at 87, buy demand at B. The fund holding for the stock has been steadily increasing, and even apart from the last three sessions, before that, if we go ahead, I mean, the stock showed no signs of absolute distribution during the consolidation base formation. And on the right hand side of the base, it started to show signs of accumulation as well. But as you can see, when the stock broke out, post the breakout, I mean, the stock has been closing near the day's lows for three consecutive sessions on above average volume. So, I mean, which at the moment is not a good sign. It's not able to sustain above the pivot, and it's currently trading 2% below the pivot at the moment. So, I mean, not to rule out of the stock, very good fundamental story, very good business drivers behind the stock. I mean, maybe in later sessions, if the stock again breaks out or re-breaks out on above average volumes, and your RS lines again starts trending higher and it's able to sustain above the pivot, it's a very good stock to watch out for at that moment.
I'll take a few queries now.
Okay.
I'll start with the APL Apollo. This stock has also been under our radar, I can, majorly because you can see very sharp action in the stock. It reclaimed its moving averages and currently it also broken out from its base pattern. But in today's session, it again closed below its pivot. You can see in the last 4 to 5 trading sessions, stock had a very good price volume action. You can see stock closing in the near days high and volume also above average volumes. It's a very positive sign. Stock reclaiming moving averages and closing in the top half and volumes on the higher side. So it is ticking most of the boxes on price volume action front. But it was this is major. This was the trading below pivot at this particular point. But after closing above pivot, it was not able to sustain the growth, and it closed below pivot in the next session, which is not a positive sign. But if it comes again to the buy range, it's a very good contender for addition. If you look at EPS strength, it is at 94, indicating a strong fundamental character from the company. That is majorly because the company was able to generate double to triple digit growth in terms of EPS and higher double digit growth in terms of sales. Consistent growth rate has been seen in this company. So definitely a positive sign, and that is reflected in its higher EPS rating as well. RS rating is slightly lower, but you can see it has improved drastically. RS line, if you follow the RS line, it fell drastically and it, again improved very drastically. So when the breakout happens and if it consolidates above pivot, definitely RS rating will also improve to 75 to 80 levels. Another few other parameters which we look into in any stock are ABD rating, that is accumulation distribution rating, is at the highest for this stock. That is majorly because if you see the volume section closely observe, you can see the number of blue bars that are above average are higher than the red bars which are above average. That is the reason ABD rating is at A+. And the number of funds, which is another major factor of canceling methodology, has been very good for the stock. In the recent quarter, the company was able to attract new funds. Nearly 18% growth was seen in terms of the number of funds which are invested in the stock. So on most of the parameters, it is ticking the boxes, and only breakout is not sustaining. So if it sustains breakout, definitely a good contender for addition. Next is Indian Bank. On one side, Nifty Bank is trading at all-time highs, but this stock is clearly underperforming the Nifty Bank Index, and this is clearly you can see the stock is trading 16% below its highs, that is off highs. The stock reached its 300 DMAs and it is trading only above its 200 DMA, which is a longer term moving average, which is black line here. That is going to be next line of support for the stock. If that level is also breached, then we might see further selling happening. But the chances of that happening in this current market are on the lower side. We might see good action happening in the PSU banks as well. They have also been reporting good set of numbers, especially in the asset quality front, which are around 5 to 7% of GNPS they used to report, but recently in the last few quarters we have been seeing consistent improvement in these gross NPS and net NPS levels. But if you are looking, if you are asking for a perspective addition on this particular stock, it's an avoid at this particular point. This is majorly because it is broken down from its pivot and it is trading below their moving averages.
Raj, I can take Angel 1 and Concor. These are the YouTube queries.
Yeah, sure.
Okay, yes. So this stock is having an excellent EPS strength of 96. The buyer demand is also good, but the price strength is lacking a bit. But you can see overall since last few sessions, almost 8-9 sessions, it is continuously moving higher. But one concern that I see over here is the volume. So I think for first 4-5 days when it moved higher after the breakout, there were decent volume, but now the volumes are decreasing. And I think that today the closing was also off high. So overall, the industry is in a good shape. And I think you guys might have heard the news that in May, the new demat account opening reached the I think the 9 months high. So the number of demat account opening is good. And I think the volumes on the exchanges are also decent. And with the broader market picking up, right, more retail participation is expected in the market. So that will directly impact the revenues as well as the earnings of the brokerage firm, especially someone like Angel One who are much focused on the retail guys. So some traction can be seen on the chart as well. But overall, it's an extended one as of now. So according to O'Neill, no fresh position suggested over here. Maybe need to give some time to form a fresh base over here. Even the moving averages are, still, I think 50 DMA is below the 200 level. So it is getting adjusted after a sharp fall from around 1600 to 900 to 1000 almost, right? So there was a sharp fall in the first quarter of this calendar year. So it is recovering from there, and let's give some time to it. Otherwise, the fundamentals, the return on equity, that's quite decent. The growth is also fine, but technically it needs some time to form a base or bounce from a moving average. The other one is Concor. So the stock is trading almost 20% off highs, and you can see it is trading below its 200 DMA and not able to reclaim it. So last week it tried to move above its 200 DMA level, but it failed. And I think after that it was down on a very high volume, as you can see on the volume bar. So this big pink candle, right? And even the fund holdings not majorly down on a high base, 3-4% here and there is not a major issue. Already 650 funds are there, but yes, there's no major traction as of now from the fund. And here also you need to give time to get the technical damage, which is already done over here, needs to be repaired. Because the price strength is poor, there's no major buyer demand over here, and even the EPS rating needs to improve. So might need to give one more quarter over here to improve technically as well as fundamentally. Okay, we can take Airtel, Bharati Airtel. think this stock is holding well among the large cap names, but after forming a cup, I think it's a cup or saucer. Yeah, it's a cup base. So it looks like a saucer, but I think the time frame is still a bit depth is a bit higher, almost 14.5%, and that's the reason it's a cup base. And after you can see there was a sharp momentum during the breakout. वो 888 का high बना दिया था इसने, but I think that was on the last day of the month due to that some MSCI rebalancing the high volume and high price action. It was in Airtel, Kotak, बहुत जगह पे था, but उसके बाद it settled down, and again it is forming some handle type formation, and it is getting a good support at 21 DMA. So let's see if this stock gets a good support at 21 DMA, and it's still 4% to pivot, and it rebounds well. Two things needs to improve over here: price strength as well as the buyer demand. And if you look at the earnings section, Raj, so
Yeah.
The last quarter was decent, but it's not a consistent earning guy. Some negative ROE over here. See, overall, the industry is moving towards duopoly, because the Jio as well as the Airtel, these are the two main leaders in the industry. Though Vodafone Idea is trying to compete, but these are the only two major players. And I think their average revenue per user is gradually increasing, because you might only experience that 2 साल पहले आपको प्लान का कितना देते थे, अभी कितना देते हो, ठीक है? So you can get that estimate. So no worries on the business front. The growth is quite decent, but I think technically it needs to improve, as well as earnings में consistency आना जरूरी है, plus technical rating needs to improve.
And now I'll take quick queries. CDSL has been launched more than a couple of times. It's a leading company in India. In terms of business, this has a good market share when compared to NSDL. But as a company, you can see here as a stock, it has been underperforming the market. It was clear for the last more than 7 to 8 months, the trajectory has been on the downside. Once it reaches 200 DMA here, and since then it was not able to reclaim its 200 DMA. It tested a couple of times, but it failed to reclaim 200 DMA. Recently, it reclaimed short-term moving averages such as 2150 DMAs, but a longer-term moving average, which is a crucial support for most of the stocks, 200 DMA, is not able to be reclaimed. The current scenario you can see here, I found the resistance as well recently. On the price volume action front also, the technicals are deteriorated so much. RS rating has come down to poor category of 21. This is majorly because of a breakdown and stock declining on continuous basis. There is no recovery seen in this stock. A small recovery has been there, but it has not been accompanied by good price volume action. The price action is subdued here. Volumes have also come down. Couple of sessions it tried to advance higher, but again, following sessions it paid most of the gains. So there is no clear momentum coming into this stock. On the earnings wise, you can see even though EPS is at 81, but growth has not been there in the terms of sales and EPS. Number of funds, another key parameter, is also lacking for this stock. So overall, on a couple of factors, the stock is lacking and it is not placed well on these factors. So if you're looking for an addition, this particular point, please avoid this kind of stocks. In the current market, we have been seeing most of the stocks breaking out from the base patterns and extended from the pivot levels. Always stay with performance or leaders rather than staying invested in laggards. Okay, next I'll take Gland Pharma. Pharma has been in the traction recently. We have talked about pharma stocks as well in the beginning of the session, but if you see here, it is complete in contrast. Clearly, out underperformer. Clear momentum is on the downside. It has been trajectory has been very bearish. The stock reached its moving averages and it is not able to reclaim those levels. There is a complete breakdown of this area. RS rating is also lowest in the category of 1, which is considered lowest. Volumes on the breakdowns are also on the higher side. Stock is not able to find support and not able to reclaim the moving averages. Completely, please avoid this kind of stocks because we don't know the exact bottom. These stocks can go to any point, any bottom. So it's very important to preserve capital. These stocks will take out most of the profits you have made in other stocks. So please avoid these kind of stocks. Always keep stop loss levels according to your buy price. And 7 to 8% should be kept as a hard stop loss so that your capital is not at risk.
Raj Vakarya, can I take some queries?
Sure, okay.
Yeah. So, so you took Gland Pharma, right? So we'll take Sona BLW, the auto ancillary. Yeah, Sonacom. Yeah. So as you can see, the stock has come off lows. I mean, it created lows at around 400 levels. It's currently nearly 20-25% up from those levels, and currently trading below the 21 DMA. But the only thing that is, I mean, which is important for us is base formation. And at this moment, the stock is not forming any kind of base. Someone who probably would have taken some aggressive entry into the stock when the stock reclaimed its, 200 DMA on above average volume would have entered into the stock. Yeah, what Raj is probably pointing out. At this moment, can keep this 50 DMA as your a trailing stop loss level and move ahead with that. Without base formation, it's stocks are pretty much avoidable. But on the if you try to look at the positives for the stock, there are some positives. Fund holding is increasing at a very high pace of 25%. Share held by funds are also increasing by nearly 60% in the last quarter itself. If you look at the last 4 to 5 results for the stock, that has also been superb for the stock. So maybe not now, maybe later on. It looks like the stock will form a base. Even it's consolidating between the 570 levels and the 500 levels at the moment. So maybe it can form like a flat base or a consolidation base now. And someone who probably took an aggressive entry can keep the 50 DMA as the trailing stop loss levels for them. So
I take Pricol. Since you're doing auto ancillaries,
yeah, sure.
Let's do call, and then we'll go to Power Mech because Atul has been asking.
Okay, sorry, just missed out. We'll go. Yeah. So Pricol, yes, was there in our watch list. We've been continuously monitoring this stock, and as you can see, the stock is forming early stage base, a 1B base at the moment. And the earlier breakout from the stock, from the base wasn't successful. And that is why the base count didn't move ahead from 1 to 2 and went from 1A to 1B because the advancement was not more than 20 to 25% from the first base to the next base. That is why it moved in a lateral manner. So, even if you look at the earlier base, it had the RS line hitting new highs. There were good signs of accumulation as well. But considering the market cap of the stock that is below the 3,000 crore market cap, even a few heavy volume sessions can impact the stock. So similarly, at this moment, even the handle formation for the stock is not probably the most appropriate at the moment. Why? Because you can see whenever the stock is closing down, it's closing down on above average volume. So which is not a good sign. So, but still, the stock is still 6% to pivot. If it's able to rectify this, it's able to move higher on above average volumes, and it's able to break out on above average volume, definitely a good stock to watch out for in the auto and the auto ancillary space. Power Mech. Yes, so the stock is definitely in a one-way rally at the moment since it broke out from a double bottom base. As you can see, the RS line is forming, is hitting new blue dots in each and every time the stock is moving higher. Whenever the stock retraced near the 21 DMA, that is the green line, and found support at the green line everywhere, very beautifully, as you can see, very perfect chart. And wherever it came down to the 21 DMA, found support near the 21 DMA, then moved higher from the 21 DMA, even on above average volume. So even that was a very good sign. The only, someone who would have caught it at the breakout can continue to hold. This stock and trail the stop loss. Considering the stock is 44% off the pivot at the moment, conservatively can keep the 21 DMA breach as their trailing stop loss level, or at least a partial booking profit level. Because since the breakout, it has always found support at the 21 DMA. So if it breaks down from the 21 DMA, maybe you should at least book partial profit, or try to exit, because you would hold off at least handsome profits in the same. Yeah.
I'll take a few queries now. I'll
Okay.
start with Triveni. Disclaimer here is you can see here highlight this is a part of our model portfolio, and stock is nearly more than 16% higher from the ad price. We have taken position around breakout, and you can see here around this area we have taken position, and we are continually holding this stock. Couple of times it tested its 21 DMA and it closed below 21 DMA as well, but we held on to the stock because we liked the story, and we gave a couple of sessions, and the stock was able to reclaim the 21 DMA beautifully. And again, you can see here it is currently consolidating and moving sideways. Volumes have also come down. We would like to see further buying happening. Otherwise, if the stock reaches 621 DMA, we might exit considering profit booking, and then we might move to stocks which are in good upward trajectory, because in the current market we have ample of opportunities which are breaking out and launching higher. We can see here ratings wise, it is top class in both fundamentals and technicals. Price strength, if you look at, is at 90, buyer demand A plus, yes of 93. All the boxes are ticking, and number of funds, another key parameter. You can see in the last quarter there was a huge surge in the new funds which are invested into the company. So that's the reason we have added this, and we are still continue to hold. And as I said, we might book profit if the stock reaches its 21 DMA. Hotels will also be launched a couple of times. It's a very small cap stock. I think the two stocks with the EAH, this is a bigger company when compared to the EAH associated hotels. This stock has a market cap of nearly 13,000 crores compared to other stock which has only 1,000 crores of market cap. This stock has broken out recently. You see here in the month of May itself, but after breaking out, there was not proper momentum. It retraced towards its 21 DMA, but it found support at its 21 DMA. So going forward, this 21 DMA is going to be a crucial level. In the current market, most of the stocks are able to find support at its 21 DMA, and they are able to trend higher along with the 21 DMS. This is majorly because the overall market is in the bullish side. Broader markets are also doing good. So short-term moving averages will definitely act as a support in these kind of markets. When the market is in bearish or on the downside, then the long-term moving average, that is 200 DMA, is going to be a crucial level for most of the stocks. If you are looking for a fresh addition in this stock, it is not advised at this current moment. It is extended nearly 8% from the pivot, and also after breaking out, there is no proper momentum happening in the stock. Volumes have come down drastically in the last 2 weeks, so it's not a positive sign. After breaking out, we would like to see good action happening both in terms of price action and volume action. Next, I'll take Canara Bank. Stock is currently trading the handle portion of its stage one up with the handle base pattern. But handle portion on the volume side, it is good. Volumes drying up, trading handle formation is good, but the length of handle has been extended and it reached its 50 and 100 DMS as well. So not a positive sign. We would like to see shorter handles of just 4 to 5% of depth, but this handle has a higher depth, almost the depth of cup. So it's not an ideal base formation. It might test its 200 DMA as well. When a underperformer in the current market, just like Indian Bank, which we discussed previously. RS rating is also showing the similar thing. RS line going downwards and RS rating of 63. Technicals have deteriorated. On one side, we have stocks which are making new highs and breaking out from their base patterns, but this stock is clearly underperforming when you compare with other stocks. Definitely avoid at this particular moment, and we would like to see a couple of quarters and the good improvement happens in the asset quality, and then definitely the stock is going to make a good upward moment.
Raju, Karya.
Yeah.
I mean, any queries that we have missed out? I mean, or should we take new queries only? Let's take Bank of Baroda. Let's take the new queries.
Sure.
Please remind me if we have missed some queries as well. We'll take that as well then after Bank of Baroda. Yeah. So if we talk about Bank of Baroda, I mean, the PSU bank, PSU banks in terms of the group or the industry rallied very well, and similarly with improving fundamentals, with improving results coming in, their overall asset quality for the PSU banks was improving, and Bank of Baroda being one of the leading stocks had a very good rally from the previous cup with handle base. As you can see, it nearly doubled from the base, from nearly 100 levels to 197 levels, the highs of the current base. And similarly, after that, the stock has gone into a long consolidation of 126 days. So that is approximately 4 months, around 4 months at the moment. And the base is kind of wide at the moment, and even on the right hand side of the base, where you should see some kind of accumulation coming in, that is big blue bar, that is stock moving higher on above average volumes, that is not coming, and the stock at the moment has given up on its 21 DMA and it's close trading very close to its 50 DMA at the moment. Which is not a good sign, but considering I factor for this stock is or for the bank is working well. The number of fund holding for the stock, even for a high market cap stock of 95,000 crores, you can see it has increased by nearly 43%. So, which is, you can clearly observe that it is in the eyes of your institutional investors. So maybe not now, somewhere down later down the line. Probably testing certain key moving averages. Raj, can you just show the volume bars at the down? Just scroll. Yeah. So it's moving downwards. It is not moving down on very high volumes. The volumes have kind of dried up. So that is a good sign. So maybe the breakout may not happen very fast, but if it tests its key moving averages and from there it moves higher on above average volume and even the RS line starts to trend higher, then it can be a good stock to watch out for. At this moment, no, but maybe later on if it provides a strong breakout, yes, can definitely look out for the stock.
I think we are at most end of the session. We'll take a couple of pages and then we'll wrap up the session. Most of the stocks we are able to answer. Me and my colleagues here, we have taken most of the stocks, and then Mr. Balaji has a generic question about our market status. Why is it still in rally attempt despite Nifty moving from 18,100 to 18,700? This is theoretically we are in rally attempt. We have been waiting for a follow-through session. But despite that, even though we are in rally attempt, we have been adding stocks, we have been aggressive, and by aggressive, I don't mean that we are adding each and every stock to our portfolio, but we are cautious and as well as aggressive. Both we are able to balance both the emotions, and we are able to add good stocks to our model portfolio, which are doing very good. You can see our current holdings section as well. Most of the stocks are in the green, and many of them are about 20% gain as well. So we are happy that we are able to catch the up move which happened in the market despite being in rally. I think we can wrap the session now. You say, Vikas.
Yeah, Raj. You can go ahead with the closing remarks and wrap up the session. Yeah, no issues.
Sorry for there have been some stocks which have been left out, but please write to us on our email ask@MarketSmith.India. So will take time to answer your queries on mail in more detail as well. So we are going to wrap up the session now. Thanks for everyone for joining, and I hope it was a good session. As a part of hosting team, we are very happy because of interactive session we had. I hope the same feeling is reflected in the participants as well. Thanks everyone for joining.
Thank you everyone for joining the session. And yes, what Raj said, that if sorry if you would have missed out on certain queries, and you can always write to us on our email ID, official email ID. Thank you very much. Yeah.